Now, new Finance Minister Tito Mboweni set to deliver the country's medium-term budget tomorrow against the backdrop of anemic growth and warnings about populist policies. Now, as ENCA's Devin Mudigan reports, Mboweni's stance on the country's economic direction will be key in preventing further credit rating downgrades.
Tito Mboweni would have had very little impact on the projected numbers contained in this year's midterm budget, a process which started in June this year, before his appointment. But he walks into the National Assembly with a few dark clouds hanging over the economy. Growth too weak to generate the required tax revenue, pressure ahead of an election to satisfy millions of economically marginalized South Africans, and the reprioritization of 50 billion rand to fund a stimulus plan.
It's a big dilemma because it'll be difficult for them to figure out where to cut. And public sector wages have been one of the most contentious things, 14% of GDP, and people have been trying to see how government works around that. And at the job summit, they promised that they're not cutting jobs. So that's out the window. So what more can they do?
Then there are the contingent liabilities in the form of state-owned enterprises. 2 months ago, both SA Express and arms manufacturer Denel joined the ranks of other SOEs looking for bailouts. A further help to these entities threatens the country's current debt burden of 246 billion rand, which is equivalent to over 50% of gross domestic product. With borrowing such a big threat, raising the taxes of already struggling South Africans ahead of an election is not seen as an option. Ratings agencies, though, will assess our creditworthiness based partly on our economic growth expectations. Most major institutions see our dismal growth this year coming in between 0.5% and 0.8%. The midterm budget provides a plan of strategic spending over the next 3 years. Analysts are not expecting any surprises in terms of the numbers, but Mboweni's tone will be clearly watched. Devin Mudigan, Johannesburg.
All right, let's continue to unpack this story now. We're joined in studio by Pieter Faber. He is from the SA Institute of Chartered Accountants. Thanks, Peter. Thanks very much for coming into studio. I mean, there are a whole range of things that are on the top of my list of what we're hoping to hear from the new finance minister tomorrow. The bolstering of personal finances must be up there with the most important things. Employment and, of course, the fuel price. What's your take on what we can hope for in tomorrow's medium-term budget policy?
Look, the medium-term budget policy statement, we won't see very big things happening, but I do hope we'll see a bit of statement of intent of what we can see in February. And I think a lot of people are hoping to see a direction, whether it's investors, whether it's credit rating agencies. So I think to a large extent, that's what we're hoping to see tomorrow.
Yeah. I mean, how much of Tito Mboweni will be stamped onto this budget, do you reckon?
Well, I think, as I said, as to policy intent, as to the actual nitty-gritty detail, I don't think that much. I think the budget process is quite a lengthy process. It's not just done 2 weeks in front of the policy statement. It's done by various and approved by Cabinet and the President. So I don't think we'll see in the actual nitty-gritty much stamping down by the current minister. As to policy intent, we've already seen some statements being made about concerns on the wage bill itself. We've seen some of the unions react to that. And I think that those are some of the discussions we already want, at least from a policy statement, to hear that these are the things we might see some statements being made going forward.
But in terms of the things that are really hitting consumers hard at the moment, the increase in VAT that we saw coming into play a few months ago, the zero rating on more of those essential consumer goods, do you reckon that there won't be much movement on those types of issues that are really pressing on our pockets as we speak?
As to the VAT increase, I think from that there's still quite a lot of uncertainty as to whether we will see it continue into the new year. I personally believe it probably would. We won't see an increase, but it will be stable. I think what a lot of the poor consumers are waiting for is the zero ratings. But once again, they'll have still quite a minimal impact on their total spend. So I think even though it's relief, it is not full relief for the total cost, which is some of the concerns Parliament expressed when we had this. I think the big thing is probably the fuel levy and the increase in taxes. But there again, currency depreciation and a rising oil price is probably going to be a lot bigger concern than whether we get a 5% or an 8% RAF or general fuel levy increase.
So among all of these issues, government has this delicate balancing act where it needs to think about the effect on poorer consumers versus the effect on our bottom line as a country. Is that a difficult one?
Well, it is a difficult one because there's so many priorities, there's so many issues burning. And I think the one big concern to all of us is the, call it, known unknowns. So what is it going to cost the fiscus for things like the SOE guarantees, infrastructure collapsing, things like sewage and waterworks, road infrastructure, rail. So all these things that we have big concerns of, but we don't know what the money, and even now municipalities, we've seen quite from the Auditor General's report, a lot of dysfunctional municipalities and a lot of them in financial trouble, which somebody's going to have to pay for. And I think these are the even bigger concerns of what are we going to have to pay for that we don't have quantified currently.
And in terms of, you know, how important this medium-term budget policy statement is for the Finance Minister's office and what that represents in terms of stability for our country and attracting those hundreds of millions of dollars that the President is hoping to do.
Well, and that's correct. We need to take, there's a lot of opposing, call it, interests, and at the end of the day, government needs to start deciding which ones are the more important. And at that stage, the decisions need to be guiding those decisions. And I think, as I said, a lot of the investments, foreign investors will be looking at some form of indication, what are we going to see from this minister going forward and this presidency? So are we going to go very conservative and just do more of the same? The minister already in his first week noted we actually need to start thinking differently. And the question is, when we get the budget in February, is that what we're going to do, or are we going to see what we've just seen in the last decade or so? And I think that would be probably a bigger concern.
I mean, we've seen the minister be incredibly prolific on Twitter in this Trump era of tweeting everything you want to say. Are the markets, as you say, keeping a close eye on this budget because it will give us a sense of what we will see as we build up to February?
Yes, I think the markets will, and I think specifically regarding, and that's what's been the last few years, how much money are we actually collecting? Are we collecting enough? And how much are we spending? Now, I think we are quite positive if we look at the actual revenue collections up until August. They've actually been just over budget year to date as compared to last year at the same time from a budgetary perspective. So that means we'll probably be very close to, if not on budget this year, which was actually quite surprising given that economic growth in the budget forecast was 1.8%, and we're only realizing a third of that currently.
Yeah.
So it's quite robust, and strangely enough, VAT, which is a transactional tax, the VAT 1% increase has had a phenomenal, if you look at, we're probably 22 billion up on last year, at the same time last year, which is quite good. And even pay as you earn, which was quite not that buoyant in the last few years, has been quite good in collections. And I think there the concern is rather that because government is such a huge employer, I think, speak under correction, 25% of the total employment, is it just because of the increases government is giving? Or is it a general reflection of the economy as to the employment status? And I think that's when we have opposing views that government actually needs to reduce its workforce. By having such a large workforce, it actually will have a large impact on employees' tax collections as well.
I'm glad you're talking about employment issues. That's another big one for South African consumers. I mean, our employment rate, over 50% of our young people sitting without jobs. Is that something that the minister surely will be keeping a close eye on tomorrow?
Well, he will, but I think to a large extent it should be acknowledged the Treasury can only do so much. A lot of what we need to do, employment, etc., lies outside of Treasury. It lies with the Department of Trade and Industry, Department of Labour, and these departments are going to sort of have to implement. And once again, from a policy perspective, a good example is we try to say that we're driving small business, yet if we look at things like incentives, rights and regulations, we're probably giving a lot more there to employment.
Yeah.
So it's a lot easier to be employed than to start your own business. And we need to start choosing one or the other. If we're saying that small business is the future of this economy, well, we should be incentivizing it a lot better to actually, for those small businesses, not just start up, to actually run successfully.
Yeah, absolutely. I'm hoping that that will be one of the big issues that the minister does focus on tomorrow. Thanks very much for coming into studio.
Thank you very
Pieter Faber is from the SA Institute of Chartered Accountants as we continue to discuss what we're hoping to hear come out of the new finance minister's maiden medium-term budget policy statement, which takes place, of course, tomorrow.